All right, guys. Hey, welcome back to Ask a CPA podcast. I've got myself, Russell Wallace, and we've got a co-host here, Brett Phillips.
Let's
How you
go.
doing, Brett?
I'm doing great, man. How are you?
Doing fantastic. Right in the middle of busy season for us. Now we've got this kind of 3.5 months or so where we are kind of swamped. So if you're out there asking your CPA some questions, and they're taking a little longer to get back to you, give them a little grace. But we're trying to get it all done, and we'll get back to you as soon as we can. Give us a little grace while we get through this little spring season. But you staying busy, Brett?
Heck yeah, man. I love busy season. This is where we make all of our money. This is when
Yeah.
we get, well, not only that, but we're meeting with clients that we only see a lot of them only see once a year, or, you kind of get an update of people. I have clients that I've worked with for 10, 15 years. And it's good to see them and kind of catch up and, get an update of kind of where everybody is. And, some people have just grown these huge companies. It's so cool to see these people. Like, I had an initial meeting with a guy who he was a business consultant. He had just started his company, and he was asking me about structuring and stuff. And he was a really cool guy. We got to know each other real well. This was 10 years ago. And now he's got 30 employees. He's just turning and burning, and he's just making a ton of money, and it's really awesome to see. Being able to see a client through the whole cycle of their business is really cool. Introduction to, or just starting, getting those first couple sales to, hiring their first employees, and in this big growth phase. And now he's, made a lot of money, and he's starting to, decide if he's ready to wind down or sell, or, what the exit strategy looks like. So it's kind of fun to see clients through these different cycles of the business. It's pretty neat.
Yeah. No, I've got a few clients where when we started working together, it was how do we maximize and utilize these losses in the most tax efficient way, to now the conversation is what do I do with all this money?
Right.
How do I not get hosed by the IRS every year now that I'm making all this money, And so those are fun conversations, And that's what I love about busy season, is you get a lot of that. Like you said, you get to see some people that you don't normally get to see, and get to hear some updates on where people are, especially these clients that we've had for a long period of time. The other thing that's great is that you always know what to do, right? They're, the middle of the summer, you can go to work, go to the office, and you're like, hey, what's on the schedule today? What am I doing? What am I doing today? But when it comes to March 12th, you know exactly what you're doing that day, right? You're working on tax returns, you're returning phone calls, right? It's just it's really busy. Your day is full. You feel like you got to add a lot of value to people's lives, and it's a good time. It's a good time. I love it.
Yeah. I always tell clients, man, my stock is so high right now. I'm so not hard to get a hold of, but it's harder to get a hold of me. You have to get on the calendar and book a time. But, as soon as April 15th comes, my stock drops significantly. It's so much easier to get a time on my calendar after April 15th than it is right now. I mean, my phone stops ringing pretty quick after the deadline.
Yeah. You do feel very important right now, you just feel hey, my role in society is a useful, valuable role, and then, come May 1, no one's who's that guy? Who is that person,
Yeah, exactly.
That's okay. We'll take it while we can get it,
Yeah, I'm looking forward to playing some golf though, man. I haven't been out in a couple months. I need to get out there and swing the clubs and, remember what it's like to be outside of the office for 4 hours at a time outside. It's going to be great.
Yeah.
I'm stoked.
Yeah, no, we get a little pale, guys like us. We get a little pale after a minute, We need to get some sunshine.
Vitamin D, man. I need to get out there for sure.
Yeah.
And we were talking earlier, you're thinking about you're doing a big trip this summer, right? Tell us about that.
Yeah, I got to start the Appalachian Trail. So if you don't know what the Appalachian Trail is, it's about 2,000 miles. It goes from Georgia all the way up to northern Maine. So a pretty long way up the full kind of northeastern, or kind of original 13 colonies kind of span there. It takes about 5 to 7 months, I think, if you just walked it straight through. But, the goal is to start it with my kids now while they still like me, and hopefully they'll still like me enough towards the end they'll finish it with me.
That is really cool. They have another thing called I think it's called the Great American Loop, and you do it in a boat, and I think you go down the Mississippi and you go down around Florida, and then back up into I think in through like New York. But you have to like do all these waterways and navigate the rivers and the different levees and bridges and all this stuff. It looks really cool, but it's similar. It's like a 5 or 6 month a voyage that you're living on this boat trying to navigate all these different waterways. Seems pretty cool.
Yeah, no, that is awesome. That is awesome. Well, we're recording this podcast here in March. You got any spring break plans?
Yeah, we're gonna head down. We have a rental property down in Florida. We're gonna head down there, and we'll see. I think it's still gonna be pretty cool. But, it'll be nice. Get down, sit on the beach, and take phone calls from the beach for a week, versus in my office. I'm gonna have to bring like a monitor and laptops and all kind of my whole setup. Basically, I'm going to take down to Florida. I don't know how much beach time I'll end up getting, but maybe I can squeeze in a couple walks on the beach while the kids are out there.
Yeah. Well, I've been there, and it's a great view. It's a great view. And so you've done this before, but you'll have to record a little Ask a CPA short there from your patio, because it's a nice view. So people will hate that you're having to work so much, but they won't feel so bad for you, once they see the view that you're working with.
Yeah, it's a great location. It's not very big. It's like 600 square feet, the whole place. It's a 1-bedroom with bunk beds in the hall, so the kids sleep in the hallway. And but it's fun. It's perfect for 4 of us. It's great, and we're really lucky and blessed to have that place.
Yeah.
So,
well, your wife is a design extraordinaire, right? So it may be small, but it is superbly furnished and an amazing property.
It is, yeah. She really decorates it really nicely, and then takes really amazing pictures of it, which we put up on Airbnb. And that place stays booked because she really makes it look just amazing. And it's a great spot. So we get awesome reviews on it too. So people are always, they beat up those reviews. So you gotta make sure that you're, every guest that comes has a wonderful experience, and you're answering all their questions really quickly. And it's a bit of running like a little hotel, but it's fun. And it's favorable tax treatment as well, which is great.
That's right. Short-term rentals, right? You take some ordinary losses if you can, and all that good stuff.
Yeah, my wife's a real estate professional, which helps.
There you go.
She's a real estate agent, so that's one of the main benefits. I was thinking about doing a cost segregation study on it as well, to really juice up those depreciation expenses in a big tax year. Because I have an IRA that I need to roll or convert to a Roth. So I'm like thinking about maybe I can do all these things in 1 year and just
there you go.
Max out the income, but then max out the expenses as well to kind of offset that.
You got to recommend Source Advisors, right? So those are some guys that we've used. I think we've both used those guys before for some cost seg studies. And so those, they do a good job. They're pretty cost effective. And the best part is that they put out a good product. So, if you ever get audited or something like that, you got the substantiation to support it.
Right. Yeah, and these things that we recommend to our clients, we have to do ourselves. Otherwise, our clients will be like, "Oh, is this really true?" Every time I meet with a client that has a rental property, I'm like, "Here's what I do on my rental property," and walk them kind of through the different strategies I take, and how to maximize the rent, and kind of some tricks of running Airbnbs, and then walk them through all the tax situation as well, and it really makes them more comfortable with it, knowing that I do this myself. This is how I do it. So, they feel more comfortable that it's a really good strategy that's been thought through versus just something that's actually, that you read about or that you go take training on. And then you're like, trying to pitch this strategy. It's nice to know that your CPA is actually doing the same things that he's recommending to the clients.
That's right. Well, because you own that Airbnb, right? Like you get all my Airbnb questions, if I have clients that come up and they got something going on, I'm like, hey, let me get back to you on that, and I'm like texting Brett over here while I'm on the Zoom call, like, hey man, what do you do here?
Yeah. It's funny.
Well, we've got some great questions here for some folks that came in through one through the comments on the YouTube videos. If you're watching on this YouTube, be sure that you like and subscribe, but also post a comment down there. We read those comments and we use those questions here in the podcast, but we also get podcast or questions in from our askacpa.co. That's askacpa.co website. So go on there, submit a question. And, if it's a question we think that a lot of people have, then we answer it right here on the podcast. So we've got a couple in here. We've got Mark and Sophia, Mark from Dallas, Sophia from Chicago to jump into. But let's start here with Mark. I think this is a good one for you, Brett, here. Mark S. from Dallas says, I didn't maximize my retirement contributions last year. Can I still contribute to a retirement account and deduct it on my tax return? So, he didn't deduct it last year. He didn't contribute. We're here in the spring. He hasn't filed his tax return yet. What can he do, Brett?
Yeah, that's a great question. Like most great questions, it depends. So it depends on the type of retirement account that you have. It depends on if you're a business owner, if you're self-employed, or if you're an employee of a company. If you're talking about like a company 401k plan or like a SEP or a solo 401k or Roth IRAs or traditional IRAs, they are all treated a little bit differently. But for after the year's already closed, probably your employer 401k is probably going to be closed for the year. I don't think you're allowed to make back contributions into an employer-sponsored plan. But if you're self-employed, well, first let's go down the employed route. So you probably can't do that, but you could still contribute to a Roth IRA if you qualify. So if you make under the income threshold for a Roth IRA contribution, you could still make an IRA contribution. You could probably still make a traditional IRA contribution if you don't have an employee-sponsored plan. So if your employer doesn't offer a 401k or an IRA, then you can make a traditional tax-deductible IRA contribution up to the filing deadline. And if you're self-employed, you could make a SEP contribution. You can make a solo 401k contribution up to the extended filing deadline. So if the filing deadline is April 15th, you have until October 15th to make those contributions.
So on the solo 401k and the SEP, one great thing about the SEP is that you could still set those up. So the solo 401k, you kind of have to have set up
solo
already.
401k, you can't, right?
Yeah. But the SEP, the great thing is that you can set it up right now. So even if you've done nothing, you didn't plan for this at all, you didn't talk to your CPA before the end of the year, which you should always, always do. So starting November, going into December, CPA should just be on your calendar somewhere to ping them and say, hey, here's what I've got going on in my life. What can I do? And so we can help you out. So if you didn't do that, and so you've got nothing set up, you can still set up a SEP, and you contribute up to 25%. If you're a sole proprietor or a partnership, you can still contribute up to 25% of your taxable earnings into that SEP, which is huge. Up to, what is it? Is it $69,000 this year?
Yes.
For 24?
Yep. 69,000. Yeah.
Yeah. So it's just huge. It's just huge.
Yeah,
so great.
That's nice on this SEP. But yeah, you are limited to 25%. So, get to kind of, what is that? Shouldn't do public math, but yeah, 280,000 you have to have, subject to self-employment tax, which isn't a great answer because you really want to try to minimize that amount of self-employment tax. That's why we always push clients towards solo 401k because it doesn't have those limitations and still has the same contribution max of 69,000 that you can make in a single year.
Well, and the key to all of this is that as a business owner, if you have employees, whatever you do for you, you have to do for your employees.
Exactly. That's a great point, Russell. And every employer that we meet with, they say, I want to maximize my retirement contribution.
Yeah.
How can I do that without having to contribute to all my employees? Or, some employers come in and they say, hey, I want my employees to start contributing as well. I'll match, to a certain degree, but I want to be able to contribute to mine as well and make sure that I'm maximizing my retirement plan. So not all employers are, I wouldn't say greedy, but you got to watch the bottom line as well. It's expensive to run a business, and tax is always one of the biggest expenses. So you always want to try to take those deductions now if you can. And retirement accounts are usually one of the best ways. And we always hear this, well, why don't I set up a management company so I don't have to contribute to my employees' retirement plans? I'll just set up a separate LLC that I'll pay out of my main company I'll funnel some money over there for a management fee, and then I'll just contribute a ton of money to my retirement account.
Why didn't we think of that, Brett?
Yeah. Does that work, Russell?
That does not work. It does not work. There are affiliate rules that you have to take into consideration, and the way that the IRS will look at this is that if you own a majority for sure, but even if you could just control more than one entity, you have to combine those entities together.
Bummer. So that does not work. We're not the first people to think of that one. I bet there was a period of time where the IRS came out and said, okay, here are the rules for retirement contributions. And everybody said, okay, great. I'm going to set up another entity. Then the next year, the IRS came out and said, okay, you can't do that anymore.
Yeah.
It seems like they come out, set up all these rules, and then every CPA sits down and starts thinking, all right, how can we get around these rules? Every CPA and tax attorney, they're like, okay, there's got to be a way around this. Let's see what the loophole could possibly be. And then the next year, they close all the loopholes.
Yep. This is true.
Which is a bummer. But
yeah. When you ask why the tax code is something like over 50,000 pages at this point, well, this is why. And this is also why like a flat tax and all that other stuff is, I think most CPAs kind of laugh at these ideas, right? Because the tax code is only as long as it is and only as many pages is because somebody writes a rule, somebody finds a loophole. So somebody writes a rule to like eliminate the loophole. Then somebody finds another loophole. So they have to write another rule to eliminate that loophole, right? And it just goes on and on and on. So if we eliminated all the tax code, we simplified everything, I think it would be a short number of years before we're back in the same situation again.
Yeah, and it's not only that, it's also, Congress, they have all these special, tax incentives for certain groups that have lobbied and, helped pay for their campaigns that are, that they want to support. So, there's tax incentives for real estate, there's tax incentives for oil and gas and all kinds of different little one-off horse breeders. And, there's all kinds of weird little tax deductions and credits in the tax code for these, very specific areas that they've lobbied to take advantage of. Like the Augusta rule is a great example where the people that live in Augusta, Georgia lobbied to not have to recognize taxable income if it's less than 14 days of rental income on their primary residence. So, little things like that, they're very specific to certain situations that people have lobbied for. And that's another reason why the code is so dang complex and complicated. Fortunately, there's people like us out there that like to play the game and, read all these code sections and come up with interesting different strategies to help you, the taxpayer, minimize your overall tax liability. We've got to make sure that we're taking advantage of all these tax deductions and tax credits. And the best way to do that is to start a business, be a business owner, or own real estate or some kind of actively managed activity. And that's where you can really get fairly aggressive on your tax positions and maximize those expenses, which minimizes your overall tax liability. When the first time Trump ran, and he was saying, they came out and said, oh, he has like a 0% tax rate. And he's like, yeah, that's because I'm smart, right? It's because
I remember that.
He's playing the game. He's investing in real estate, and they're taking depreciation on that real estate, which, lowers his taxable income. But he's also creating hundreds and thousands of jobs, which helps stimulate the economy, which helps grow the economy, which is ultimately what Congress wants.
That's right. There's a lot of tax code, and like you said, like we enjoy kind of playing the game. People a lot of times ask me like, why how do you like being a CPA, right? Isn't it just the green visor and the banker's lamp on the table, and all that stuff? And you're like, well, no, when you think about it, like it's a game. Like I'm trying to beat the IRS, they're trying to beat me. Like I don't know if they're really trying to beat me, but I like to imagine that I'm important enough that they're trying to beat me, right? And I'm trying to beat them, and so we're in this kind of competitive battle, and hopefully at the end of the day, my clients win because of it.
Right. Absolutely. Well, thanks, Mark. I know we kind of got off on a tangent there, but you do still have some options if you're an employee or self-employed. So, yeah, I would recommend looking into those options, working with a CPA to help make sure you're maximizing those expenses and reporting that correctly. The next question is some From Sophia in Chicago. Feels like we get a lot of questions from Chicago. She asks, I didn't claim mileage for business use of my car last year. Can I estimate it now and still take the deduction? What do you think, Russell?
The IRS doesn't generally like the estimation part of that question. So this is what I tell my clients, and that is that in order to take the mileage deduction, what you need is a 5-column mileage log. So you can have more information on there if you want to, but it needs at least 5 columns. There are a lot of apps out there that do this. The key, if you're going to use an app, is that it syncs to the cloud. You can download some sort of spreadsheet. You can send it to your CPA. We keep it in your file to make sure that if you ever do get audited, we can substantiate that mileage expense. But those 5 columns that I always say to my clients, is make sure we've got these 5 columns, right? So date of the trip, you got the starting address, the ending address, the number of miles driven, and then the business purpose of the trip. So if you've got those 5 columns, then you're going to be good to go, and you won't have to worry about any kind of issues, right? So the best way to do that is like Mileage IQ or some of these other apps. If you just go to the App Store, there's like 100 of them. The key is that it syncs to the cloud. It's a little bit of a Big Brother experience, right? Because this app now kind of tracks you everywhere you go. And what happens is it knows that you drove in a car because it knows that you can't run at like 70 miles an hour, right? So it knows that you went in a car somewhere. And so it'll ask you like, hey, was this business or personal, this trip? And so you just kind of mark it business, mark it personal. And it's that easy. And then at the end of the year, it has all your business miles, has all your personal miles. You're good to go. The other thing that you might want to do is to make sure that you get your oil changed either like December, January timeframe of every year. And what that does is that provides third-party verification of the total mileage that you've driven, right? The odometer reading, right? And so third-party verification just means that you've got some verification from somebody else that isn't you. And so the IRS is going to believe Quick Car or the car guys or whoever it is. They're going to believe those people more than they believe you, right? And so if they write out on the receipt, the invoice, or they put a little sticker on there and they say, hey, look, odometer reading is this, and you do that in December or January of every year, that gives you a really good gauge of the total miles driven. So you can substantiate that, and then you've got the mileage log to substantiate those business miles. So now you're golden. So that's like the best case scenario. Now, if you don't have a mileage log already and you want to still take the mileage expense like Sophia here in Chicago, so what do? Well, what you can do is you can go back, you can look at your calendar, right? You can look at your emails, those kinds of things. You kind of recreate that mileage log, right? So you first got to figure out where your tax home is, right? So where's your tax home? Do you rent an office space? You work out of your house, that sort of thing. If you work out of your house, it's pretty easy. Every time you leave your house for a business purpose, then that's a business trip. If you don't, well, now every time I go anywhere, I have to subtract that mileage from my house to my office because that's considered kind of commuting mileage. So I've got to subtract that. But anytime you take a business trip anywhere, like you have to list that out. So you look at your calendar, you kind of list those out, you kind of build that mileage log. There is some evidence, I want to be cautious here. There's some evidence that you can take, maybe a month or 2 months or something like that and extrapolate what that business mileage should be. But that is not in the code, right? So that's not something that's been accepted before, but that's not in the code. So I want to be very clear about that. Don't as kind of biblical that it's going to it's absolutely, I took 1 month. I was listening to this podcast. I said I just had to take 1 month. What are you talking about? I can't take this expense, right? So one of the things I tell my clients all the time is that if you get audited by a human being, right? And so there's another person that's sitting across the table. And sometimes, most often, it's quite literally a human being sitting across a conference room table, like in my office or at your house or at your office, that sort of thing. And it just depends, if they believe what you're providing them or not, right? So if they don't believe it, right, then they have a lot of IRS code and regulations to back them up that they can just disallow some of these expenses. But if they believe you, hey, look, preponderance of the evidence says that this is a legitimate mileage expense, they're going to move on, right? Especially if it's a low dollar amount. But if you're a real estate agent or somebody like that is just driving around, like a salesperson that's driving around all the time, I would not count on the fact of kind of, hey, I'm going to extrapolate 1 month, just multiply times 12, that sort of thing. I wouldn't count on that. If you're taking $30,000, $40,000 of mileage expenses, that is probably not going to work, right? So, but there is some evidence that if you haven't done it already, go back 1 month, as long as that month is reasonable and it's representative of the year, of most of the months in the year, multiply that times 12, you're probably going to be okay. Again, it's better if you go back the whole year, but if you can't do the year, at least do a month and create that as kind of like a paper trail to substantiate those expenses. But also, if you're trying to take $30,000-$40,000 of mileage expenses, then don't extrapolate. You really need the whole year, right? Like that's probably not going to work. So that's kind of been my experience. That's what the coaching I give to my clients. Do you tell your clients anything different there, Brad?
No, that's great. I think QuickBooks now has the same integration, like
Yeah,
that they'll allow you to they'll track you and provide that documentation. But yeah, having that third party application is huge, and you still have to fill it out. It's kind of fun. You swipe left or right if it's business or personal. It's like the dating app for for business owners. I don't know. I was married before those dating apps came out. Missed the window there, but
you miss Tinder. Like, man, gosh,
it wasn't there.
living.
Yeah. Been married too long. So yeah, so this is the new Tinders that you swipe left or right for business or personal for your auto mileage, and it makes kind of a game out of it. But yeah, this is available on QuickBooks Online. I think it's the self-employed version that you can do it. And they also have apps through that website as well that you can download, and it'll track that. Or Mileage IQ is great as well. I think it's pretty reasonable. I think it's like $50 a year, maybe $100 a year. It's pretty reasonable. Yeah, but that's the same thing. And just track everything. The more you can prove, the better. I had a client that went under IRS audit once for mileage. They had taken, just a really high round number, like 60,000 miles. Of course, the IRS comes in and says, prove it. Let's see them. They had no mileage log, no activity. They couldn't prove anything. And so they were a doctor, and they were going to like a couple different hospitals every day. So we could kind of track from their house to their first hospital is commuting, non-deductible. But then from the second hospital to the third hospital to the fourth, and then back home. And we were able to kind of, calculate what we thought the reasonable mileage was, and saying, they were going to these hospitals 3-6 times a week or whatever. And the IRS allowed it. It was still a big adjustment, so I think he was still happy that they were able to, get it back down to a reasonable amount, so that a favorable adjustment for the IRS. But yeah, but they still accepted that. Not saying that every IRS agent would accept that. I know we've dealt with other ones that are, really tough, and they come in and say, hey, give me a receipt for every business meal. I need to know the business purpose, who was there. And you're just like, we don't have receipts for any of this stuff. I have no idea who was there. So it can be difficult. Like you said, you sit down in front of a person, and you say, hey, I'm a business owner. I'm trying to do the best I can. I want to provide all the documentation I can. It's a little overly burdensome for me to be able to document every time I go. I have 20 meetings a day. I can't document each person that I talk to between each location. It's just not. It's not reasonable for me to do that. But in order to take those deductions, that's what the IRS requires. So if you do get a stickler of an IRS agent, they can come in there and play hardball with you.
That's right. Well, here in early 24, there was actually a tax court case that came out that said that a kind of a post return filing audit log wasn't valid. So they went back and they recreated the audit log, and the IRS agent said no. They took it all the way to tax court. The judge said no. Like, look, you can't take a deduction and say that you drove 60,000 miles and then like make some mileage log after the fact, right? So like you can't do that, because then how would you have known what the deduction would have been, right? So they just said, look, some miles may have been a valid, but you didn't know what that number was, and this number on the tax return is definitely not a valid number, so you can't take it. And they eliminated it. And so you got to kind of be careful about that. If you ever do get under audit, I would definitely advise you work with a CPA so that you don't step on a landmine like that, right? That's not something you're going to say. It's not something I'm going to say. I'm not going to just like offer up this information like, hey, give us some time. We're recreating this mileage log because they didn't have it. That's not a conversation that's going to happen. And
right.
So make sure that you're working with a professional. There are a bunch of landmines in an audit that you could step on, and a professional is just going to help you avoid all of those things. I
have a feeling they really pissed off that IRS agent. That seems really unreasonable.
They had to have. Because it is just a person, right? Like, it's just a person.
Yeah.
And that's what I tell people a lot. You know, I've gone into audits and I've come out and my client was like, wow, why were you so nice to that auditor? You know, and I'm like, well, because we won, right? Like
Right.
we walked out and like we're happy with the result. Like that's why I'm really, really nice, you know? And
Yeah.
I'm
They're
like
just
their
doing their
best
job.
friend.
They're just
Yeah.
doing their job. I mean, it's not a job you want, but
I
they're
mean,
just
and
doing their
look,
job. I mean, they're nice people overall. I mean,
yeah.
they're just trying to enforce the rules, and they're going to be there at 10 o'clock in the morning. They're going to leave at 4 o'clock in the afternoon. They're never going to work late. You don't have to worry about that.
Yeah.
They're typical government employees. You know, they're out when the bell rings. But yeah, most of them are pretty nice, and they're mostly very reasonable, and they're not out to put you in jail or anything. They just want you to make sure that you're playing by the rules like everybody else. And if they weren't there, everybody would probably be way more aggressive on positions that they're probably overstating. So it's good to kind of have that balance, kind of the checks and balance to keep everybody in check.
That's right. That's right. You know, they're understaffed and undertrained and overworked, just like everybody else, right? So if you make their day a little bit better, they're probably going to help make your day a little bit better at the same time, right?
That's right. Yep.
So
we always give them coffee, give them drinks,
That's
give them
right.
some snacks,
some
whatever
donuts, bagels,
That's
whatever
right.
you want, you know, kind of bring some lunch in. They always decline the lunch, right? Because I think there's some sort of like, like you can't, like there's some sort of a de minimis benefit or something like that they can't receive over a certain dollar amount. So I always decline the lunch, but I always offer it, right?
Oh yeah. Every time.
Yeah. Well, hey guys, I appreciate your time. That's going to wrap it up here for our podcast today. AskACPA.co. If you haven't yet, if you're watching on YouTube, be sure you like and subscribe. If you're on Spotify, be sure that you subscribe this. Leave us a comment, get this question answered. I had a really great time answering these questions and can't wait for some more to come, So we'll talk to you soon, Brett.
Absolutely. Sounds great. Thanks, Russell. See you next time, buddy.
All right. Bye-bye.